All right, guys. We got sound. Yes, we have sound. All right. I tried to make this video earlier, but it didn't work out because I didn't have my sound. So today I want to talk a little bit about something that helped me a lot. So I've been studying under different trading mentors for years. Some of them great traders, some of them good traders, some of them bad traders, but they were all teachers. And the greatest traders mentorships that I've ever had, I've noticed that they seem to have this different way of processing. They seem to have an emotional instinct of the market. And I really did a lot of research on this. Like, what is it? How is it that they remember all this stuff? Because I don't know about you, but if you're anything like me, I have been learning order flow, harmonic patterns, Fibonacci, indicators, how they work, moving averages, just so much, all the patterns, how the volume works in different patterns. And it's enough to go crazy. And if you're anything like me, maybe you even built like these massive checklists. I've got these laminated checklists that I've built over the years on process. How am I going to do this? And it came to me that, or one of my mentors told me that they work in loops. The best traders, they don't focus on remembering 30 different things. They focus on remembering like 4 different things and creating a habit loop around there. So what is a loop? A loop is a repeatable question, kind of like a fast scan. It's like a binary decision, and then they move on. Experts do not loop tools. They did not make indicators their masters. Their indicators are their tools. They loop questions. So today we're going to go on over 4 master loops that I have learned from one of my greatest mentors. So loop number 1 is the environment. When we're trading, we want to know simply, what is the environment? We want to simply look at it, and we might just kind of look at it, start real simple, and we might just say, all right, let's look at it on the 30-minute time frame and just say, what kind of market am I in right now? As you can see right now, we are in a market just from basic, right? Low, higher low, higher low, higher high, higher high, higher high, and then now a little bit of sideways action. So we're in some chop. I would say that this is a range. We're in somewhat of a triangle of a range. Simple, right? Scan the high time frame structure, impulse. Is this a corrective pattern? Is this a correlated market? Is there any news? Is trending, ranging, transition, impulse, corrective? This is how you work in your tools into your loop. But your first loop should just simply be, what kind of environment am I in? So I'm going to get rid of some of this stuff. Your second loop, or I would suggest my second loop, is value. Local value. I might bring up here and I might say, all right, let me just come here and say, where am I at in the value process? As you can see right here, I pulled a fixed range. I'm going to get rid of this little line right here because it's bugging me. Actually, I'm going to get rid of all these boxes. And we might just pull a fixed range value here over this range and say, where are we at? What is the volume like? You can see we're here around the value area low with the point of control above us. So in the auction process, we are at the lows and we have been expecting higher lows. Simple, right? Where's value? Where's the price relative to it? Now, in this loop, you'd be working in your high time frame horizontals, your naked points of controls, your VWAPs, your value areas, your fixed range volume, right? Is it above, below, inside, early, late, right? All that stuff. Where are we at in the value process, right? Because you got to remember, it's an auction. So this part of your loop, you're just saying, where's value? Next, what we might look at is participants, right? Who's under pressure? Who's in control? For this, I like to use order flow, right? Here we're on a weekly. We might come to a 30-minute. I'll show you a quick and easy way. So now we might just say we're looking at that same chop. Now, if we want to know who's under pressure, who's right or who's wrong, we might look at the lows and say, at this low, we saw a decrease of open interest. No trap traders. Do we see any CVD divergences? We've got a low and we got a low and we got a higher low and a higher low. As you can see here, we have a low here, a low here, equal low, equal low. No local divergences. Now we want to look at how open interest went up. And when open interest went up, who was getting involved? So open interest up with negative delta. So up here, there were new shorts opened. Okay, those shorts played out, and then price just kind of wiggled sideways. Now, if you're watching this, I don't know when you're watching this, but we're looking at the Bitcoin chart around Christmas 2025. So a couple of days before Christmas, it's been very low volume, not really any big moves. So this might not be the best example, but we'll go backtrack a little bit and we'll say here, we saw a massive open interest increase while price was going down, and we saw negative delta. Heavy shorting, high volume, no trap traders. That was it. Price came up, went a little bit above this high, and what did you see? You saw an open interest flush on the way up. Very simple. As price was going up, it took out all these shorts, reset the market. That's that. So participation is what you're going to ask in your third loop. Who's under pressure? Who's right? Who's wrong? Here's the tools you're going to use. You're going to look at CVD, open interest. You're looking for absorption. You're looking for failed auction. You're looking for buyer's trap, seller's trap. There's no one trapped. And then that's it. You keep it very simple. Who is the participation? Who are the participants? Now, one of my favorites is execution. So here we go. So now what we're going to do is we're going to take all these tools that I predetermined and we're going to tie them all together. So now I'm going to introduce my high time frame levels. I'm also going to introduce my MPOCs. I might even anchor a VWAP. And I might move that over here to a local low. Okay, that's kind of useless. So right here, what do we see? So right off the bat, I'm looking at my highest levels of confluence. If I pull a fib from the high to the low, and now I have enough to get started on a trade. So as you can see here, what do you see? I see a level of high confluence right here. I see a point of control inside a golden pocket. I also see a daily level on top of an MPOC. And now I have here stacked confluence value area low with 2 daily support levels down here. So right here, now I have my execution phase. What is the asymmetric risk? What confirms it? What is likely? Where's confluence? Where's liquidity? And what's going to be my entry trigger? So I'll say it like this. When you have a liquidity zone, as you can see here, we have a series of highs, another high, and another high. So as you can see, when we had this previous liquidity, we have been swing failuring all of these highs, right? So if we have a level of resistance with the Fibonacci golden pocket and a point of control, it's not outside of the realm to think that price might do this. Come on up and swing failure pattern and come on to the downside. That seems like a great plan. Why not set an alert and let myself know? Watch for the swing failure pattern. Entry trigger. Okay. Now when that alert goes off, what do I have to do? I go here, simply go to my delta, and I look inside that candle and I say, all right, is there trap traders? Was there open interest that went up? Is it negative delta, positive delta? If I do see price go up, open interest go up, and there are people caught off sides, right? Let's say price comes up here. There's a bunch of longs that open in there. In this case, it was shorts, and price drifts below. I know that those longs are going to get squeezed. If it's at high volume and it looks good, that's an immediate entry trigger. The loop takes out the confusion. The loop takes out the thinking. The loop takes out the memorization. You don't have to memorize all these different things and have things sticking all over the walls and post-its and notes and checklists and all this stuff. Create a habit loop that takes the work off of you. I'm telling you, the experts, they don't need AI, right? They just need to look at it. And over time, they develop these loops and everything is built into the loops. Remember the airport analogy. Everyone goes through the same metal detector. When the detector goes off, they just know, take out that wand. What are the most best spots, right? They're doing a little crotch search, maybe a little behind the back, maybe a little under the armpit. These are the spots. And you wait for these triggers at these spots just by simply doing this process. So as you can see here, there's one trade, right? We could see that's a good trade, confluence, and we got liquidity. If that fails, then we would look for it to happen right about there, right? And then you can start to build your context of symmetry. So I'm going to get rid of some of this. And then we start to say, does it look right? Does it look right? I mean, this is very choppy price action. Does it look right if it does this? And then it comes down here to seek this. And then it comes here to seek this. Hell yeah, that looks right. Right? Low, higher low. Well, actually, that's a higher low. Higher high, higher low, higher high. Now, the beautiful thing about this is this trade doesn't have to work out because now you have your zone. You have an idea of what your entry trigger is going to be. So you can look for it visually. You can look for it with delta open interest. And then from there, when you see it, all you got to do is take the trade. And I'll tell you, one of the most beautiful things is this will keep you from staring at the chart. There's nothing worse than staring at the chart all day. Just do the work, put in the work, set the alert, and just don't stare at it. Then when the alert goes off, you already have your plan. What I like to do on my alerts is I like to tell myself exactly what I'm looking for. As you can see this one, I already have an alert here. Daily and MPOC hit. Check the volume candles. This one, I have a volume candle entry because I'm not expecting an SFP because all the liquidity is down here. So here I would be expecting a high volume candle to hit this resistance and then maybe do a little bit of a retest and then come on down here if we don't hit this first. Tomorrow we could come down here, tap this, do a little reclaim, come on up here. So then I'm in a long and then I'll look for the short somewhere around here. Anyways, guys, I hope that helps out. Build loops. Stop memorizing everything. Stop filling the walls with crazy stuff. You're never going to access this. And the masters at this, they don't have all these different things in their heads. They have a few loops and everything plays out instinctively. Hope that helps, guys. And we'll see you next time. Stay tuned. Hopefully a lot of good stuff coming. And hopefully this helped you out. Thanks. See you next time.